think that that's one of the things we can do is, past can be precedent here. So in 2018, I went for several of my clients before the U.S. Trade Representative, and they had days of hearings where they would hear from industry, and they had to add extra days because so many people wanted to talk about the tariffs at the time, and they were there asking for, almost pleading for relief from these tariffs, because what you were seeing was businesses with a next quarter tax bill that had increased by thousands or even millions, and it hadn't been budgeted for. So those costs had to be passed on to consumers. And I think that that's probably a lot of what you're going to see here. I know we've seen people going back and forth thinking maybe these are just negotiating tactics, but we know it's policy now. And I don't know that there are going to be that many companies who are dependent on Canadian and Mexican imports and Chinese imports that can really soften the blow of this and not just pass this directly on to the consumers.
What's been interesting from a market perspective is that, ironically, the U.S. market has been underperforming European and Asian markets year to date, despite the fact that President Trump has touted these tariffs as being beneficial for the U.S. economy. What do you make of that underperformance and perhaps the outperformance of Europe and Asia? Are investors in those regions being complacent about the risks for their companies?
That's possible. I mean, I think that the markets are seeing this different ways. There's a gamble here, right? The gamble is by the administration that supply chains will adjust before cost hikes show too much drag on the economy, whether that's the Wall Street economy or the kitchen table economy. And I think that the markets are seeing it different ways. I think the U.S. Has seen these tariffs before. They've seen what happened in 2018. They've seen that it has some negative impacts on manufacturers who use inputs that are imported. And I think they're pricing that in. I think that there was an uncertainty. And so I could see how markets would go different ways because it was not clear. I mean, even when we talked about coming on the show yesterday, I was preparing comments, but I didn't know this was tariffs as negotiating tactic or tariffs as policy. But now we've seen that this is tariffs as policy. And I think that we can say, when we hear a tariff threat, we know that we can expect tariff discussions and then tariff implementations, and businesses can respond accordingly.
In terms of the long term here, again, President Trump says that these tariffs are designed to convince companies to nearshore, reshore their operations. What do you expect in terms of that actually happening? Do you see U.S., European companies bringing more operations onshore in the U.S. from a long-term investment perspective?
I think that that will happen to a certain extent. I mean, where it can be done, companies will onshore, nearshore, reshore their production. I think that that's going to be immediate. But there are items, that we import to the United States that simply aren't made here right now. And in order to spin up that capacity, in order to create those facilities to fabricate whatever materials or components and inputs there are, that's going to take time. And so I think that you're looking at months and years of reshaping logistics chains. And again, we are not certain how long this policy lasts, right? If there's a walk back because there's a negative economic impact, then is it worth doing a 4-year, 5-year out plan to base your production in the United States if you don't know that that's going to change? We are helping businesses, analyze the underlying law and then adapt and adjust as much as they can, and then to look ahead at what's coming. And I think that that's really where you need to look, is where there are currently safe harbors, where there might remain safe harbors, but what really are the next targets.